We appreciate all of the questions that were sent in by our clients prior to this taping. This next question is for Bryson Roof. What sort of multi-generational planning does Fort Pitt Capital provide?
Many of our clients fall into the sandwich generation. While the sandwich generation has their own unique financial planning requirements as they're approaching retirement, they're often also tasked with assisting aging parents with nursing home and adult children as they start their independent lives. With regards to aging parents, nursing homes are a complex decision. Fort Pitt Capital Group advisors have experience coordinating with skilled elder care attorneys to protect assets from nursing homes. We'd be happy to assist you navigating your assisted living options and how to structure your assets for future generations and charitable or legacy gifting options. With regards to adult children, let's celebrate. Your children just received their first paycheck. Now they have questions about taxes, insurance, should they buy a house or rent an apartment? What's this 401k thing? We're happy to help your children to whatever extent they want, helping them understand the importance of having an emergency fund to assisting them with opening a Roth IRA. We enjoy working with all of our clients, especially their loved ones.
Good job, Bryson. It's just great when we can work with multi-generations of families. We have a couple questions for clients regarding Social Security. Beth Lynch is going to answer these questions. She's our in-house Social Security expert. The first question is my benefit reduced or taxed if I continue to work?
This is actually a two-part question. If you're receiving benefits and you are under your full retirement age, some of your benefits will be withheld or reduced if you work. The maximum amount that you can earn before benefits get withheld is called the earnings test, and it's adjusted for inflation each year. In 2021, the earnings test amount is $18,960. Also, in the year that you turn your full retirement age, the earnings test threshold is actually a bit higher. So the amount in 2021 that you can earn in your full retirement year is $50,520. So you really should talk to your advisor about when you should claim your benefits. We always are encouraging our clients not to apply for Social Security benefits if they are under full retirement age and are still working. Once you hit full retirement age, after the year in which you turn full retirement age, the earnings test does not apply, meaning your benefits will not be reduced or withheld no matter how much you earn from working. So the other part of the question is about whether the benefits are actually taxed. Most individuals will pay taxes on their Social Security. The amount of tax paid depends on your income from all sources, including tax-exempt interest such as municipal bond interest. So if your total income is more than $25,000 as an individual or $32,000 as a married couple filing jointly, you must pay income taxes on the Social Security benefits. This tax is up to 85% of your Social Security benefit. Below those thresholds, your benefits will not be taxed.
Here's another question for Beth. If I receive a stimulus check, will that add to my income and affect my Social Security benefit?
Okay, as I stated earlier, your Social Security benefits can be taxed if your income is above those thresholds that I mentioned. Any additional taxable income will increase your adjusted gross income, which then increases your provisional income, which is what determines whether your Social Security is taxed. So if your provisional income goes up enough, then you're looking at a tax increase. So the key question here is whether that stimulus check actually boosts your taxable income. The good news is stimulus checks are really just an advance payment of a new recovery rebate tax credit for 2020 tax year. As such, they will not be included in your taxable income. So the stimulus checks will not increase your adjusted gross income or your provisional income. And if your provisional income does not go up, then the tax on your Social Security benefits will also not be taxed. So another quick tidbit while I'm talking about taxes on Social Security is people often wonder what happens to the tax money that's collected from Social Security benefit as to whether it goes to the IRS or back to the trust fund. And the good news is it does go back into the trust fund and it's used for future benefit payments. It's one of the three sources of income that makes up the trust fund. The other two being payroll taxes and interest on the securities in the trust fund.
Thanks, Beth. Your insight is very, very valuable to our clients. Here's another question, this one for Nathan Box. I see that you advertise for retirement plan services. What does retirement plan services do?
So in retirement plan services, we work with businesses and nonprofits to help them manage their 401k, 403b, or pension with support to meet their fiduciary obligations, allowing them to focus on running the organization. We do this in part by looking for the best-in-class investments at the lowest possible cost. Further, we offer financial advice to all employees in the retirement plan to help them achieve their financial goals. When we could go places, we would offer in-person one-on-one meetings with anyone that would like to meet, with the goal of making them successful retirement savers. Now, we can still achieve those same goals by the use of technology and having virtual meetings.
Follow on to that is, if I have a retirement plan already, do I have to change administrators if I want to work with Fort Pitt Capital?
No, you do not have to switch administrators or record keepers to work with Fort Pitt. We can work on just about any platform. So if you like your record keeper or administrator, you can keep it. We will, however, do our due diligence to make sure it's the right solution for you. We work with one-person startup companies all the way to companies with several hundred employees with multiple locations and everything in between. No client is too big or too small for us to work with.
Thanks, Nathan. Appreciate your thoughtful responses. At Fort Pitt Capital Group, we work with a lot of small business owners. We had a question recently regarding SEPA, Certified Exit Planning Advisor. Chris Cheney is going to describe what a SEPA is and what a SEPA does.
A SEPA works with business owners to help them realize their goals. While the impetus may be exit planning or transition planning, as the name indicates, the focus is on accelerating the value of the business and addressing all the issues needed to help maximize the potential outcome. Business owners have a unique set of challenges in addition to those of an individual investor. Typically, they have most or all of their wealth invested in the business. It's not just their wealth, it's their lives. Many of these see this business as their babies. It's part of their identity. For most, there's no clear dividing line between what is personal and what is professional. As a result, the situations can be complex with layers of issues and levels of concern that need to be addressed. There are typically three key areas of an owner's life that need to work together to achieve a good result. You have a business, you have the financial aspect, and the personal. Think of them as a three-legged stool. In my experience, most business owners are very clear about their immediate business goals and pretty clear about their long-term goals. Their financial goals may be an afterthought, something that they pay attention to when they have time, which is rarely. Their personal objectives are almost never considered, even though these can be the most important ultimate determinant about whether or not they have a successful second chapter. All these elements need to work together in order to be successful. We understand this, and we work together with you to create a plan that addresses all three legs of the three-legged stool: the business, the financial, and your personal concerns, the things that are unique to you. It's an iterative process. It takes time, and it takes a team of folks to do it right. Who needs to be part of that team will change depending on where you are in that process. The one constant throughout is your financial advisor. We are the one person who is with you throughout the entire process, and we will be there with you after the end. So how do we start? The first step is to get a good idea of your financial picture. So give us a call, and we will begin the conversation that will put you on the path to success.
Thanks, Chris, for fleshing out what a certified exit planning advisor can do for a small business owner. We have a question for Brad Newman. Can I retire during COVID? That's a good question. Brad?
Like Mike said, we've received a lot of questions related to planning for or transitioning into retirement. Specifically, can I retire during COVID, or honestly, any year with a really notable market downturn? We did have a number of clients retire at the end of 2020, and I'm really happy to say that none of their plans were derailed by the COVID or any of the other challenges that came along with 2020. But right now, let's take a look at some of the key concepts that help them remain focused and will help you remain focused regardless of what the environment is. So first, don't focus on planning to retirement, focus on planning through retirement. The coronavirus pandemic and the volatility that came with it have caused everybody to review and reevaluate their ability to retire as well as their capacity for risk. But we need to remember that volatility is a short-term proposition, whereas retirement is a long-term proposition. Keep in mind that your time frame isn't going to be measured in months or years, but rather in decades. So the conversations that we had with this year's retirees back in March really focused on the fact that they didn't have a 9-month time horizon, but they had a 20 to 30-year time horizon. Secondly, don't try to time the market. We're just not going to get it right. Too often, market timing results in us selling investments at or near their lows, essentially when we're really scared, and then repurchasing the same investments after they've recovered, basically when we feel comfortable again. And behavioral finance tells us that our brains really haven't evolved that much from our caveman days. Every decision at the core really comes back to fight or flight. Remember, if your overall investment policy or your strategy was appropriate for your situation before the coronavirus volatility came, it's appropriate during that volatility too, and it's going to continue to be appropriate after the volatility passes, unless there's some dramatic change in your personal situation. And finally, we need to have a realistic understanding or expectation of market volatility. We need to understand that, number one, volatility is never going to go away, and number two, we need to be prepared for at least a 20% market downturn in the stock market every 3 years for the duration of our retirements. Like I said, we can't market time our way out of it. We need to understand that we'll get through these periods with a strategy that's appropriate for our situation and with a portfolio that's built to handle the downturns. So success over time is really going to look more like limiting downside participation versus being completely immune to the volatility. With all that said, the real key is to quantify your situation with retirement projections and update those projections as your situation changes. And know that there's going to be volatility, but focusing on the long-term performance relative to your plan and your goals will help you get through the volatility. And as always, please don't hesitate to reach out to us as concerns arise. Thank you so much for attending our virtual client event this year, and hopefully we're going to be able to do this face-to-face again in 2022.
Thanks, everybody. Well, that ends our Q&A. Thanks to all of our advisors and portfolio managers for their fantastic answers. We appreciate everybody's attention and interest in providing the questions to Fort Pitt Capital Group. Don't forget, you can go to our website and check out our blog posts on many investing and financial planning topics. Thanks again.